Good morning, everyone. Welcome to Admiral Markets. My name is Chris, and together we're going to take a look at my charts. So, first of all, I would like to check if you can hear me. I think so. Jen is writing good morning. Great. Good morning, Caitlin. Thanks for joining us. This is the last day of June. So, we're going to head off to the second half of 2015. And those kind of days always do tend to be a bit more volatile. So, be careful with that. That's the first thing that we should be aware of. There's also other things going on. Obviously, there's a lot of negotiations going on, or perhaps not anymore. But the failure to find an agreement between Greece and the creditors is something that could definitely hinder the euro trade. So we have to take a look at that and be careful of this aspect. Also, Friday we have NFP. No, Thursday we have NFP. Friday is actually a day off in the US. So it's maybe in that regard a bit of a wacky week. But anyhow, we'll take a look at the charts and see if there's anything interesting, perhaps on non-euro pairs. First of all, though, be aware that this webinar is intended for a global audience. It may not be suitable for everyone. To find out more information, if it is, and other conditions and details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. So today the focus is on Camarilla indicator, by the way. Let's see. Today, otherwise, pound consumer confidence is marked as yellow. Retail sales, German unemployment rate, Eurozone unemployment rate. That's it. All right. And any of the news, of course, that could hit us, I guess, at any point in time. But looks like there will be elections going on. Euro could be a bit difficult to trade. It had a strong rally actually after it gapped down actually and recovered quite remarkably more than 3 cents, more than 300 pips. It's now falling again. This is a bit wacky price action to a certain degree. Well, anyhow, even if we just look at it from a technical point of view, the moving averages are all intertwined at this point. And considering the impact of any news event that could hit the radar, which is difficult for me as a technical trader because I don't really look at that. So, from that point of view, I don't like at this moment, the euro dollar all too much. But if we just look at the moving averages, they're quite intertwined. This could be a zigzag, perhaps. This could be a bullish sentiment, in fact, after which we make a retracement for upside. But it's all a bit difficult to really build a trading strategy or a trading plan based just on that. I think at the moment, when I look at other aspects, it's all quite negative. It doesn't really look interesting to trade. Yes, there was a big daily bullish candle, but still, considering the potential dangers that one would expect around the corner with the eurozone, doesn't seem maybe like a great trade to take to the upside. So from that point of view, could be better to be careful. Where are the Camarillas? Let me take a quick look. You can see it's reaching the daily pivot and the L3 long. Let me zoom into the 5-minute chart. It's kind of accelerating away from the moving averages, in fact. So 111.50, 111.10 could be levels to think about. And then maybe 110.50 if it really accelerates. But so there seems to be a bit of an intraday downside push at this moment, but I rather look at other pairs. Let's take a look at the pound dollar, for instance. Pound dollar already broke out, unfortunately. This is, I was looking for a break below 157, 20-ish here, 18. These fractals right here, I have a green line on purpose there. That's the breakout to the downside. I also have lines to the upside. If it were to break to the upside, I wanted to see price push above 157.40, 157.50-ish here, 52. That was the level I was looking for upside breaks, and we're getting the downside break. So in that regard, it looks like we should see some follow through now to the downside. Let me take a look where the targets are for downside by using this fib sequence tool. Main targets here 156.80, 156.50, and from that point of view, it looks like, let's see how far this can go. From a how far this can go from a 4-hour point of view, it's still stuck in a kind of wedge. It's actually at a very crucial point in time. This support level, I think, right here, the zone, very important. If that breaks, we can see a follow through to the downside. If, on the other hand, we get a push through this level, right in here, then we can see the upside. So for me, these two levels, about 156.60 here on the downside, on the bottom, and 157.50/80 to the upside. All right, because once we get a push through either of these levels, I think we got a good continuation potential. If we get downside, then I would expect price to head towards these moving averages to kind of close the space between the moving averages. I've talked about it in moving average webinars already before. And you can see that if you look at the sequence levels, these purple lines, for instance, here, we stopped at the 4th sequence level here. There would be space down to the 5th one in that case. That's kind of the space here to the downside. Not a lot, but still some. To the upside, there's a lot more because then we would do it the other way around. We can use, for instance, this as a target here, and we would see space up to the top basically, and then probably even breaking the top up to the next target here at 160.40. And there's a lot of space. So from that point of view, we need a breakout before you can really expect a lot of space on this 4-hour chart. From a intraday perspective, we're kind of falling now towards the support right here, and there could not be a lot of space, but still it was a nice small little breakout here when it broke through 157, 20-ish, 18. But got to be careful of 156.80, which is not all too far away from now at the moment. So I think this trade is, unless it really hooks back to 157.18, this downside trade doesn't make much sense anymore because the support level is so close by. I'm referring to long-term moving average of 144 EMA close, and my short-term moving average is 21 EMA close. From a Camarilla point of view, let's take a look. 144 and 21 band, and let's take a look. You can see that price is perhaps going to bounce at the L3. That would not surprise me actually. If it does give a hook back, let's see. Got 5 more minutes and this hourly candle is closed. If it does hook back on the 5-minute chart to about halfway, it could be worth a small short. It's an intraday short, more of a scalp trade, down to that 156.80, which could still be a bouncing spot and then go back up again. You know how the pound dollar, it likes to move like a roller coaster, up, down, up, down, up. So there could be a lot of various movements throughout the trading day just on the pound. Oh, that let's see. Nana thinks it's already a buy if it closes above the, let's see, L3. Well, I to me it could definitely be a bouncing spot. But personally, I rather wait for a bit more. Probably would rather wait for a break above 157.30 at the minimum. So I would be still waiting a bit more for longs, I think, personally. But I mean, I don't know exactly how Ned derived to that. So I mean, he probably has good reasons for it. But I'll probably be a bit more conservative and wait a bit longer. Ah, cool, Caitlin. Yeah, that's funny. I just added it indeed a few minutes ago before this webinar. That's funny. So from that point of view, um, looking at the 5 minute chart, I would be still hesitant to go long unless it really breaks these tops here. And I wouldn't be surprised to see a follow through to the downside still a bit. Let me take a look here. Especially because we broke through the L3, I'm a bit expecting still the downside down to 156.80. Perhaps 156.50, but that remains to be seen. Well, we can keep an eye on this 5 minute chart. It doesn't have to be every 5 minutes. I mean, it doesn't have to be every single second here, but we'll go back in a few minutes. Dollar yen could be a good breakout if it manages to break through 122 here. I'd like to see at least a breakthrough that. Otherwise, I don't think it's ready yet. I wouldn't want to sell it here. I mean, it could be an ascending wedge. It could still be a good sell, but personally, I'd rather wait for the break of 122. There's plenty of space then still down to about 120. And I could look for small little pullbacks, maybe 15-minute chart for follow through to the downside. Kiwi keeps pushing. Quite remarkable. Let me take a look at some other pairs. Pound yen actually was one that I talked about last week, but that was actually a reversal spot. Unfortunately, double top. In retrospect, double top is always difficult to know at that point. But the moving averages eventually being broken, and we got to close kind of the gap, the space between these moving averages. Although it happened with a gap, that's not really tradable. And at this moment, looking like we're getting some follow through to the downside. And let's take a look at what kind of space we could see for downside. Alrighty. The next target will be all the way down here at 190-ish. So there is pretty good space. If it can make that one more push down, let's see. Looks like it's actually about to break right now. This one looks pretty good setup, I think. Let me take a look one more time at the 4-hour chart. Strong 4-hour candle, but the trend is down at the moment. Probably a bit of a pullback up to the moving averages, maybe something like this, 192.60, with a stop loss all the way up at 193.60, but 100 pips. But For a swing trade, it's not too bad for pound yen, in fact, with a target at 190.10-ish, or 2.5 to 1. I think that's a decent downside setup. But it depends on the pound. I would like to see how pound reacts today. It's already following through, actually, in the sense that it will be interesting to see if it manages to break through the support. Because if it does, the pound yen will certainly be interesting. If it doesn't, could be a bit better to be careful. For the moment, I don't know, looks obviously a bit more bearish with the current sentiment. Ultimately, it is about these levels. Could be a good short as well, the pound yen to keep an eye on. Aussie, let's see. Aussie is not my favorite at the moment because of these two trend lines. Let's see. The moving averages are bearishly aligned here on the 1 hour chart, so we do have some momentum to the downside recently with this push down. Alrighty, we are basically, let's see, yeah, it's to the downside. We would really need to push through the bottom, basically, to get follow through of that momentum. We got a lot of support here, so I would really need to break below these bottoms for downside. Let's see, for upside on the 1 hour chart, let's take a look. Upside, we could see some acceleration, probably about above this top right here, 77.10, 77.30, and we can see a follow through up to 78.20-ish. All right, so that's personally, I think I would be looking for these boundaries to be broken because at this moment, doesn't look that pleasant from an hourly point of view. Maybe on a 5 minute chart, it could be a bit different. Let's take a look. Pretty choppy at this moment. Of course, that's the difference between looking at a higher time frame, like 4 hours, something could not look that interesting perhaps, or on a 1 hour, but maybe on a lower time frame, it could, or the other way around. 5 minute chart doesn't look interesting, but the 4 hour chart could be a great setup. Those things can happen. Ultimately, if we look at the 4 hour chart, a bit different than the hourly, I mean, you can see that price moving averages are being pulled away a bit from the long-term one. And you can see that we actually went from the third sequence fib to the fourth. The next one will be the fifth at 74.70. So that space right here could be interesting. Overall, it looks more bearish, but could take a while before it develops. Let me go back to the 5 minute chart now. Put on the Camarilla. All right, we're looking at 30 on a 5 minute chart. Need to break above the 77. Then it probably has a potential to go up to that 77.50. Let's see, to the downside. So 77 important, I think. To the downside, yeah, break of 76.60 for potential probably down to 76. I think that's roughly uh, for the intraday time frames, these two green lines are probably the most important and the targets here. Let me take a look how that looks like on a 1 hour chart. Yeah, basically a break of the daily pivot down to the daily S1, break of the weekly pivot up to probably the weekly R1. So those seem to be the zones for up and downside. Alrighty, let's see. Question on the cable. Let's go back. Keep an eye on this 5 minute chart here using. Why do we add the Camarilla? I don't think it's on at the moment. Camarilla is a pivot point indicator, and we can see prices at the L3 at the moment. Still is kind of pushed a bit further, but let's see how it reacts if it retraces. Nanette might think that this is a buy because it closed above it. I'm still cautious of these moving averages and this resistance level, but with the cable, you really never know. I mean, it can make these wacky downs and fly up like that. So I'm not saying it's impossible. I just want to see how it reacts to this level and prefer to wait for a break of the top. Let's see. There was a question. You do not think cable will get to 156.20 or 155.80 or 60 this week? Well, I don't know. I don't want to. I basically am just waiting for a break, either of the support or of resistance. So until one of the two happens, I'm neutral. And ultimately, upside has a bit more space because it's an uptrend still, in the sense that the moving averages are aligned to the upside, and if price breaks above the 21, everything is aligned because price is then above the 21. The 21 is above the 144. So there's a lot more space to the upside, all the way up to 160.40. I would prefer upside play because of the space. But if it does break to the downside, then there is a chance to go back to the long-term moving average, which gives some potential, but not a lot of potential. But could go back down indeed to 156. All right, let me take a look at some other currency pairs that could be well set up. Let's see. Yeah, 166 is my target indeed. Let's see. Net had made 3 scenarios. This is scenario 1, and the price does not need to close to have a valid buy. Okay, got it. The TP would be H3 and stop loss under L4. Yeah, cool. Well, the stop loss makes sense because 156.80 is the support level. So when the stop loss is here, it's at a it's at an invalidation level. So even if it goes through it, then you exit kind of at the good spot because then the analysis is not valid anymore. Now it does look like there's a lot of momentum coming in the market here, so let's see how it responds here. For the moment, there's quite some momentum, but let's see. It's not as choppy or corrective as yet. Pin bar indeed right in front of it. Let's see. Back to the hourly. Hourly was a pretty good close. London Open does have, or the European session does have a bit of nasty kind of start, typically. But 156.80 is important for the pound dollar. It would really need to push through that for bigger downside potential. At this moment, if anything, it broke this push through broke this high. So the longs still have more chance, but I would like to see price really poking through 157.30 here. All right, anyhow, let's go to another pair. Let's take a look. Why not the Kiwi? I was a bit skeptical about how much it could move down last week. Eventually, it did kind of push through a bit. Let's take a look at the 5-minute chart. Alrighty, let's see. 67.50 could be the next target. That's the 5-minute world. Let me take a look at the hourly here. Looks like a pretty good candle, so okay-ish candle break through this fractal. That support is out of the way, so for our world as well. So I think any basically hook back would be a good short, depending on what time frame. Let me take a look, which could be the best time frame here. Maybe even just using this 4-hour candle, the high of that 68.40. 68.50 is his 1-hour fractal. Looks bearish, but probably a bit of a pullback could be better before downside down to 67.50, 67.40. About 80 pips here. 40 risk, not bad. Preferably a bit of a pullback to get a better R2R. It's now a bit not bad, but the more pullback, the better R2R. Could be something to keep an eye on. Also, the Aussie has potential to the downside if it breaks through support. Let me take a look if there's anything else that might be a bit more interesting. The Euro Yen has the Euro in it, so kind of limited if one wants to skip the Euro. Let me see if there's anything that seems a bit better. Pound out, let me take a look at the 5-minute chart here. Pound is also reversing a bit against the Aussie. Took very long, but eventually this kind of flag got a break to the upside. Didn't go all too far though. Five-minute world is bearish, just like the pound dollar, but the 4-hour world is bullish. If it does break through 204, we could see perhaps a retracement trade down to the long-term moving average here. So there is some potential there through this green line. Let me take a look. 1-hour chart now. Let me see how far that downside has taken place. You can see we're at the 4th Fibonacci sequence level. So if we make the break here, we could see a follow through down to the 5th one. It seems to be the story of today, that we need a bit more kind of price action to see if it breaks or bounces. Now it's not there quite yet. If it does break, there's this kind of space right here on the hourly chart. On a 4-hour chart, it would look like this. It would basically be filling the gap down to here, this space, and then a potential to follow through one more time down to the long-term moving average. There is divergence between these tops. All right, so if there's divergence, a pullback down to the long-term moving average could be expected. So from that point of view, it looks like pound odd has more retracement potential. Alrighty, pound New Zealand. Let me take a look at that one. In the meantime, if you are any chance wondering what the left upper corner screen button is intended to do, it's a terminal, and when you find a trade, you can use it for entering the market right away, changing any of the parameters. You can use it for closing the trades very quickly. So it's a very intuitive, quick tool for trade management, and it's a part of Supreme Edition, which is kind of an add-on to the MT4 platform, and it has a lot of extra things besides this, some 60 things in fact. So very recommendable. Take a look at this if you're not with Admiral Markets already, and you can try it out. Definitely worth your time. It makes trading a lot easier, and it's for free. If you have a live account, you can test it out for free as well. If you have a demo for 30 days, and you can see all the advantages that are connected to that. A lot of good things like free SMS service and great spreads and a lot of other tools and gadgets that are useful. For instance, here we can take a look at the sentiment trader. And you can see that at the moment the euro dollar sees a bit more shorts when looking at this is the 50-minute chart. 45% are looking for longs. You can change the symbols. For instance, the pound dollar. Let's take a look at the pound dollar. It's about 50-50. AUD USD heavily short at the moment. How about the Kiwi? 50-50. Aussie seems to be very short. Dollar yen, 45 long. Dollar CAD, 67 long. Let's take a look at the dollar CAD. Can actually take a look. Anyhow, pound New Zealand. Let's see. Wrote actually an article for Admiral Market Holland and was saying at that point that this is oversold at this point. Expect a retracement when it was right here. Expect a retracement back to about this level here. I was looking for roughly, and indeed moved back down, moved back up. How about now? Well, with the pound, bit of a question mark. I would wait. If pound strength kicks in today, pound New Zealand is a good one. Still showing a lot of good signs. Price above the moving averages. Good candle close here above the moving averages. So that looks pretty good. Now, if it does break below this, eventually would break below this fractal, then there's a pretty good retracement potential all the way back to the long-term moving average. And that could be interesting as well. But for the moment, I mean, until it doesn't break, or let me say it this way, if it fails to, or it stays above this 228.50, then I'm still bullish. So if I stay bullish, if price stays above this support level, then I stay bullish, and in that case, 220, 230, 240, 234.70 are the targets. In fact, this could be one that I wouldn't mind maybe even putting a fib on and looking for a 50 fib at about 230. For the moment, I don't think there would be anything wrong with that particular setup here at the 38.2 or the 50 fib. All right, let me take a look at the dollar CAD quickly. Where is it? Let's see. Strange. Let's see. I must have deleted it by accident. Alrighty. Let's see. Dollar CAD, indeed, moving averages are aligned at the moment. Breaking through this 4-hour resistance. Could be worth an attempt. Let me take a look at these levels here. It's accelerating away from the moving averages. Got space up to 125 for the moment. It's about 100 pips, but the stop loss is 100 pips as well, or perhaps a bit tighter one could be used here, but I would probably want a pullback, at least to probably 123.75. Get a bit better R2R, preferably. In that case, there's about 125 target and about 75 risk, a bit better. Yeah, I would probably rather wait for a pullback to anywhere in between these two lines. All right, let me continue with maybe just the other slips. Let's take a look at the let's see, pound Swissy here, bounced off the long-term moving average. Pound cat, perhaps. Let me take a look. Pound is in a bearish mode on the lower time frames. So if the higher time frames are in an uptrend, they're not aligned at the moment. That's the thing. In that regard, the pound yen is actually still one of the most interesting ones. I'd say pound yen to the downside looks good. Pound New Zealand to the upside. So it depends what kind of day it becomes today. Is it pound strength or pound weakness today? If it is pound strength, pound New Zealand looks the best. Maybe with, I guess, pound CAD eventually. I'll take a look a bit better. Otherwise, the downside, pound yen looks the better one, actually. The pound dollar, it really depends how it reacts to resistance and support. I would say at the moment, this is looking more like an aggressive bullish bounce. But still, for me, This resistance and 156.80 support are my boundaries. But let me put the target tool here at the bottom. Yeah, it's from my point of view still too early, but pound dollar could go could go both ways basically, depending on which level are broken. Pound yen more downside preferably, pound yen more upside preferably. AUD USD could go both ways. QE I prefer the downside. Dollar yen the downside actually it's trying to push through this support level, or it's approaching it. In fact, if it does break through 122. Then there is good space down to 120. That could help the pound yen downside as well. Um, what else? Euros, very difficult considering the news that is looming around every corner. But otherwise, it had a lot of momentum to the upside. It could be a follow through today if it breaks again above 112. I don't know, but it's not something that seems very appealing. Does anyone else have particular pair in mind that you find interesting at this point? Some maybe what somewhat exotic mix that I didn't think about and haven't checked yet, or have checked, but you have a particular um, setup. If cable breaks, I would not be looking indeed for downside, but it depends how you trade it, where you want to exit exactly. Um, Roughly speaking, we could see price bounce at 156, but it could certainly be a bit lower. The long-term moving average is the target, but it doesn't mean that price will necessarily stop, exactly at that moving average. It could be a few pips a bit lower, or maybe miss it by a few. So I would probably rather keep an eye on 5-minute chart and see how much it can push through and keep going, or 15-minute chart for an intraday setup to the downside. I think it's an intraday setup and not an intra-week setup because the space is quite limited. Because you can see there's a minus 272 target, there's a fib sequence level, there's a moving average, so we could see a bounce anywhere indeed around that level, but it could be a few pips lower, or even accelerate, to down to the minus 61.8 target. We never know exactly how far those targets can go. That's possible too. So I wouldn't be looking for longs as yet at those spots. I wouldn't necessarily depending on how things go, it could be a long tomorrow, perhaps. I mean, it depends how things go, but I wouldn't have that like in my mind as the most important idea. I think that once it breaks 156.80, I think the chances of downside down to this target or this target are decent, and therefore more interesting is the downside. Let's see. Caitlin is asking about a retracement to the 50 fib. Do you remember which pair that was? 50 fib. I think that was the pound New Zealand, right? There it is. 50 fib. Candle closes. Yeah, it depends on circumstances. If I um, if I want to see some reaction to price, it doesn't even have to be on a 4-hour chart. It could be even on a lower time frame, like a 30-minute chart. And then the candle close will not eat up too much space. So if you're worried about space, you can always zoom into lower time frames and look for a reaction there. If you're not worried at all if you're not necessarily waiting for a reaction, sometimes that happens. If I really like a setup a lot, I will and put a pending order at the fib, for instance, and just take a trade like that without waiting for any reaction to it. It really depends how much I like a trade. If I if I don't think it's a very good setup, I will mostly wait for market orders. If I think it's a very good setup or better, then it's okay. Well, let's see. BT is asking about how to use Camarilla and MACD. That's something that Nenad uses actually, so probably better to ask him. I use the AO, although probably it has a lot of shares a lot of attributes together. But how I use it, once again, it's actually more of a question for Nenad. But when I use Camarilla, it's more of a confluence. So I just see it as a support or resistance levels that I use for breakouts or bounces, and I try to see how much space there is to the next level, and perhaps use it as a target or as a confluence. So, but the AO is something different. I use for momentum and direction. So if the momentum is strong, what I would then use it for is the direction of trading. If it's a strong upside, we'll be looking for longs. Then I could use the Camarilla as a level where I would like to step in once it breaks through L3, for instance. I mean H3, sorry. Right? Once it breaks through H3, then that would be the signal of the moment where price pushes through resistance in an uptrend and could be used as entry or as a signal that you want to enter on the pullback after that or immediate entry right away. So one is showing the direction and the other is showing supportive resistance. Alrighty, let's see. No other suggestions. Let me take a look at the odd news and let's see how far that has risen. It's pretty far, in fact, the sixth level already, but no divergence, so it could maybe pick up even more speed and go to the next level, but that's already a very big retracement there. But for the moment, I don't see anything stopping it. Looking at the 4-hour candle, the Aussie seems to be really a lot stronger than New Zealand. So from that point of view, let me take a look at the hourly. I don't know. Could be obviously interesting to look for longs, but for the moment, not right now. Not with the resistance so close by. But if it does hook back to the moving averages at about 112, it could change things. Well, it could be rough market this week in general with such volatile kind of news events that could be expected throughout the week. It's just not a common week. It's not any average week where we have some news events perhaps, but this is a bit different dynamic when and unique in a way, of course, obviously, when developments like that happen for the Eurozone. So it's going to be, well, I guess not a lot of news could hit the radar until the referendum on Sunday, but still, I guess we never know. So from that point of view, the euro doesn't really seem to be very interesting. Most of these pairs have this large spike. Moving averages are not aligned like the Euro CAD, Euro dollar, even the Euro New Zealand. Euro odd is perhaps a tad better because at least it's aligned to the upside slightly. So from that point of view, there's a lot less to look at. Um, all right, this is definitely looking a bit more like impulse to me at the moment. And let me zoom in here to the 4-hour chart. So more and more looking indeed like a challenge to hit this support level but not break it. Let's see, especially considering the momentum that I've seen now in the 5-minute chart. For me, let's take a look where an entry could be. This is already the third Fibonacci sequence level here. All right, I need to break through 157.30. I need a good candle close above 157.30 on a 5-minute chart. And stop loss at least below this level here. Probably even below this one. I wouldn't be surprised to see a bit downside now at the moment though to retest 157, something like this. And then see that, some kind of zigzag. But for me, that wouldn't be the entry at the moment because it still hasn't broken this level. So although it seems likely, I would still want to see probably this down, then this up. For me, any candle, 5-minute candle that would break above this could be an entry with a stop loss below this bottom. And a target 157.80 is an intraday target, 48 pips. And it would be basically from here to about here. It could break higher after that, but for the moment, that's still a resistance zone because of the weekly pivot and the top on the left here. All in all, quite a choppy chart, as you can see. And let me take a look again at the pound New Zealand, perhaps pound yen is especially now being pushed down by the yen, dollar yen. Let's see if it's being broken. It's about to. Let me take a look at the 5-minute chart. Let me take a look where the Camarilla levels are on this dollar yen. Yeah, we're pushing through the L3. That's great. It would be nice if it could hit the L4 and then bounce back to the L3, roughly speaking. Stop loss at 122.53-ish, I think, and a target at L5. That would be a nice one. And if the pound dollar is bouncing to the upside, then the dollar yen could be better than the pound yen if it breaks to the upside. Let's see, this is pound New Zealand. That could be a good one. As I said, if pound does break to the upside, the pound New Zealand could be interesting. Yeah, any break above 232, this 2310, good 5 minute candle close, but I'm not sure if I would take the trade right away there. Maybe wait for a small pullback down to 23, 230, 80, 90, something like this. If there is pound strength, it could be a good one against New Zealand. Waiting for the break, then wait for a small pullback down to maybe even 22.30 for an upside up to 230.18. Probably fill up this space and this space. So I think that is about it as far as I can see. Let me take a look one more time at the pound dollar. What I meant is with the pound dollar is that we'll probably see retracement here and then a bounce, but I wouldn't want to trade that. I'll be trading if it breaks with a 5 minute candle above this level, and the candle has a strong close. So for instance, let me show you an example. Um, Here, for instance, this is a good breakout candle in the sense that it has a good close near the low. It's a candle that pushes through the moving averages and they're aligned to the downside. So that's just an example of a breakout candle. If let me see if I can find one more. It wouldn't have much sense during the Asian session, but let's see. This one here, for instance, candle close pretty near the high and above the moving averages. That could be a good one as well. And got some retracement against it, as you can see. But personally, I would recommend on a 5 minute chart definitely not to use the nearest fractal, but use the fractal two fractals away from this support level. So this is the first, this is the second. So that dip is still survivable, right? But that's a good candle. So basically, any candle that has a good strong close near the high for upside or low to the downside. So such a candle is what I'll be looking for when looking at this resistance. Now, what if this retracement, because the pound dollar could be wacky. How about if it's just a retracement for more downside, which still could be so, because it hasn't broken through my important resistance level. In that case, this is a deep retracement, but it could still retest maybe even 156.80 again, for instance. So from that point of view, let me think for a second if it's worth it, because the spaces are so tight and the bigger support is very nearby. So it could maybe not be worth it, but could be maybe the best to keep an eye on this 5 minute fractal. I don't think this 5 minute fractal would break. Or let me say it this way. If there's a good 5 minute candle, the opposite actually, if there's a 5 minute candle with a strong close below 157, there's a chance it could move down to 156.80. But the space is very small because there's only 20 pips in between those levels. So there's not a lot of space. But if the 5-minute candle does close with a strong candle below this support level, then the upside doesn't seem in any case that likely anymore. If it then after that, after this strong candle close, makes a hook back to about 157, 15, 20, more downside I think is likely. And then there's maybe 40, 35 pips. Then it's a bit more interesting. So if it does something like this, here it could be worth a short for about 35 pips. The other scenario would be if it does something like this, then here could be worth a long. I think that's how I would tackle the intraday pound dollar trading. It's not the best of potential, I think. Upside definitely has more, unless the 4 hours start to really break finally, as we discussed already earlier. Then things are looking a bit different, especially to the upside. For the moment, we're kind of confined in this tight 110 pip space that has lasted already, actually all the way here. First candle here, 23rd of June. So basically a week. Sorry, we've been stuck in between this 100, about 120, 130 pip zone. So I think this is it from my side. I mean, if from a swing trade perspective, perhaps the very last point is that if it does break above 157.80, that could be a swing trade with, I mean, 4 hour stop loss would have to be all the way below here. It's not for everyone, but that would be a swing trade. Even a swing trade if it breaks below 156.80. But I would be looking more for probably entry below 156.60 to be honest, because here's a level of support as well, as I already said. So in that case, with a stop loss above here would be a potential swing trade to the downside. Now, the disadvantage of that is that the target is very close by. So I would probably not take a swing trade there. And I would only look for intra-day shorts, not swing trade shorts, just because of the space. But upside does have a lot of space. So intra-week longs to the upside make sense. To the downside, only smallish intraday trades. I wouldn't look for swing trades. Let's see, the Aussie trying to push nearing the weekly pivot. Also here, for instance, it would be good if the hourly has a good close near the high. If it pushes through the weekly pivot at 76.92 and there's a big wick on top, that does not look like a good breakout. So from that point of view, it could be good. You can, I mean, any of these principles, like for instance, a candle close, can be used on all time frames. And it's just a good, useful thing to look at, because if it doesn't close strongly when it breaks out, the odds are just different than if it does. There's more likelihood of some retracement or even a reversal. And if there's a likelihood of retracement, then it's, in my opinion, a lot better to wait for the retracement, try to get a better entry, or maybe even skip the trade at all, and just not even look for it anymore. Does anyone have a preference still? Any questions or preference for a currency pair? In the meantime, tomorrow we're going to take a look at strategy. Does anyone have a preference for strategy, perhaps? Otherwise, I'll choose Wednesday. Let's see, Heikinashi price action with Nenet. Wednesday evening and Thursday evening, we're going to talk about dangers that you want to avoid when creating a Forex trading system. That's Wednesday and Thursday. Let's see, Jen would like to take a look at Elliott waves. Sounds good. Makes sense to me. Why not? Can do that indeed. It's good topic. So just in case I would forget, I don't think I would, I do, but I would. But don't be afraid to remind me then, Jen. Okay, tomorrow if I by any chance it slips my mind. Yeah, cool. Ilya is also in favor on BT2, but says it's difficult to master. Yeah, it takes time. But I think we can talk about it tomorrow, but I think it's good to take it step by step and start with impulse and correction first. Maybe try to label a few without getting really heavy in the details. Just practice it kind of like building blocks in a way. Because indeed, if one starts from not knowing waves and wants to right away do a full wave count, that's not so practical. Not so practical. It's difficult. It's it's too big of a step indeed in general. Agree. Caitlin says bat and godly patterns. I don't use them that often. I probably would not, definitely not be the best one for that. We can take a look at that tomorrow or the week after. Just remind me if I forget about it. Um, Basically, I just more use fib tools and I do use Fibonacci retracements. I just don't look very deeply for those specific ratios that combine to make those patterns. But they do use fibs indeed. Yeah. Let's see. Uh, Euro pound. Yeah, it has that euro in it, which is always a bit of annoyance at this moment. But let's take a look. It has that strange open gap and that and a big bullish candle. Let me refresh this template. Alrighty. Looking at all time frames at the moment. Bit of a, I don't know, seems a bit messy perhaps. Hmm. I don't know. It's difficult to read. I think this momentum is a bit worrying that we could get a zigzag, and in that case, 38.2 to 50 could be bouncing spots for upside for a rally, but yeah, that's just based on that momentum to the upside that happened yesterday. Otherwise, we are in a downtrend, but it's a bit of a wacky downtrend looking at higher time frames, and it's just a bit awkward. It's not something I really find appealing at this moment. Let's see. Let me see who asked the question. Who is it? Let's see. BT. Is there? Let's see. Can you help to enlighten me? When does the gap of get closed or not? I can because I can see some pairs having the gap closed, but some did not. I'm not much of a gap trader, but it depends how you look at it. Some say the gap is closed when the wick has been hit. or if the close has been hit. It depends also which candle. I mean, what do you consider the gap close? This candle or this one? So there is some. I've heard different arguments. I guess if you want to be, in this case, obviously it's closed because the very last candle totally got overwhelmed. So from that point of view, it's certainly closed. But yeah, the interpretation can vary sometimes. Which one is right? I don't know. I guess it's more of a zone. So if you're looking for gap closures and want to trade them, then I guess anywhere when price gets into this zone can be considered that, you know, price is in that area where it's close to closing it or fully closing it. If that helps, I'm not sure. Let me take a look at other here on the euro dollar. Let's take a look. Here, for instance, here's the close. So some would wait for that level to get hit, consider that the gap closed. Others could even use the bottom here or the candle itself, the candle low in this case, not the close. So those are three different levels. Let's see. Wei saying it could be an intervention from the Swiss bank. That would not surprise me indeed. I like to do that. And yeah, from that point of view, it's always difficult if a Swiss bank starts to make decisions. But personally, I wouldn't be surprised to see in the long run, I'm still holding on to my analysis that would say that this is a correction is possible in the next month or two up to 117, which is the 38.2 fib from a wave perspective. But obviously, eventually, I will let go of that analysis if probably price breaks through 108. Then that might not happen. As long as it stays above 108, then I would, from a wave perspective at least, the 38.2 fib is typical for a wave 4. So that's what I would be expecting. But it doesn't have to. That's kind of the problem. So if it doesn't, I need to know when it doesn't get there. And I would say that this daily bottom is probably a good level for that. Ultimately, the bottom itself, of course, would be important as well. And there's a article, by the way, that Wade just added. You can take a look there probably for more information. And also from a technical point of view, I would expect July or August or actually July, price hits 117, and then in August probably starts to fall again, and August or September for price to start moving below these bottoms. It's a 5 minute chart, so it's getting an important level. Indeed, it's a bit of a, as always, actually, kind of the pound dollar, not the was the easiest one to trade in the mornings. Flavius is saying, knowing on lower temperatures. I'm curious how this 5 minute candle will react to this fractal. If it has a good close, or if there's going to be a wick. But I'm not personally not. I don't think it's worth trading. But I am curious, as I see it as providing some information. If there's a big wick, maybe it's a bounce. If it's a strong close, it's probably a break. If it's somewhere in between, I want to see the next candle. I'm not expecting a sleepy summer, but personally, but you never know. It could always go into a sleepy summer. But considering this time around, maybe not, because considering all the news events and negotiations and The Fed, perhaps. I mean, if they want to raise it in September, then it might be not as sleepy as normal from that point of view. Typically, August is very sleepy, but somehow this year could maybe be an exception. Let's see. Just looking at all these dynamics going on. Even though maybe it's not as sleepy as I don't expect it to be as sleepy as next year. Obviously, there will be some moments that uh, probably on average the price volatility and movement will be a bit lower. But my point is that I don't think it will be as low as a typical summer. So this candle, personally, I don't. I would say it's neutral. It's not really a good candle close. It's not a horrible candle close. It's right in the middle. So it's not clearly breaking this fractal. It's not clearly bouncing off of it. So I think the next 5 minute candle could provide more info on that. All in all, I'm just curious. It's once again, it's just my curiosity. It's not something that I think is really very interesting to trade. A bounce, well, I don't, as I said, I don't consider anything necessarily until it really breaks above this 157.25.30. But a candle close above that level, then I would say 157.80 indeed. Well, to be precise, maybe it's more of a, let's see, zone between 157.75 and 156. Then if it starts to break through those levels, depending on how much speed we have to the upside, it could accelerate. Because in that case, it could start heading up to 159. It could be a breakout to the upside. So from that point of view, something like this, a break here today, a hook back still tomorrow, back to the moving averages, and then a bounce could occur. Honestly, made some steam to the upside, but still respecting that weekly pivot. Dollar yen. You see, this is a bit awkward because of this break right here. It's not really pushing through the 122 yet. It hasn't broken the 122 as yet. Just curious, we can take a look 2 minutes from now. It looks like we're getting a bit of a bounce. But anyhow, for me, 157.30 is the most important. Kiwi looking for a bit of a pullback. Well, it depends. I mean, if the pound dollar starts to go up, then the Kiwi downside obviously would be less appealing, right? That's something I want to keep an eye on, is that although the pound could be dragging the pound dollar to the upside still, the Kiwi dollar downside would be less interesting. The pound New Zealand could become more interesting. You can see already some momentum here. If the pound is showing a good break here in 1 minute with a good candle close, then that could be a follow-through trade. And it is kind of showing perhaps a bull flag pattern after a momentum up. A good candle close could be the trigger, and this could be the moment that it starts to accelerate. Stop loss, in my opinion, I would go for below this bottom. All right, there it is. So I can do this. Now that might not be the best entry. It could be wiser to, from that point of view, just even wait for a bit of a pullback. You know how that goes in the market. Pullbacks happen everywhere and anywhere, but sometimes you don't want to exaggerate either, because sometimes at one point or another, uh, you will get follow through and you might miss it. So waiting for pullbacks is good. I mean, it depends how accurate you want to get. But we're going to wrap up the webinar now, so I'll just take this long, expecting a follow through in the pound New Zealand to the upside, based on the fact that price is in uptrend. Had a good 4-hour candle close last candle. It's all above moving averages. There's no divergence as yet. There is a break above the 4-hour fractal. The 1 hour is an uptrend. It's above resistance. It's making a bull flag on the lower time frames. It's has clearly pushed above H3 and bounced off H3, Camarilla, and has pushed through H4. From that perspective, it had a good 5-minute trigger and has space to the upside from that point of view. And I just put the stop loss at a spot that invalidates the whole setup, I guess. So let's see if it works out. Let me take a quick look at the pound. Did get a bit of bounce. It's still a bit shaky. Ultimately, if pound really starts to break to the downside below 156.80, I will try to get out of that in pound New Zealand if possible, because then the upside will probably be less likely. Although you never know, the Kiwi could fall a lot faster than the pound dollar does. So, all right, well, that wraps up the webinar. Tomorrow I'll take a look at waves and at the patterns. I forgot their names, Gartley and the Bat and Gartley patterns. And that's the same time, same place. Wish you all happy hunting, good trading. Take a look at Admiral Markets social media for all the the analysis, wave analysis, technical analysis, and you'll find more information about Supreme and about the spreads and stuff like that. Okay, so hope to see you soon and good trading. Cheers.